Hey guy, what's up? Yeah, it's your boy Odebs, and welcome back to my YouTube channel, Zod Finance. Today we're going to be looking at GBPUSD. We're going to be breaking it down and look for how we can trade this setup consistently using smart money concept. So about 2 weeks ago, it was on the 19th of October, I sent out this possible trade on the GBPUSD. So we're looking at GBPUSD to come and test this order block and then make our necessary confluences, then push up to the upside. So yeah, let's see how in this trade I'm going to show you how we can use one pair to have multiple entries, and yeah, let's get it. First thing first is we have to check the trend of the market. What is the bias of the market? We can see that it's making a series of what lower lows and lower highs, so it's in a down trend. Now this trading view is on replay, so this is on the 27th of September. So if we keep on doing this, now you see again, this was our lowest point right here, right? So this was now for that break of structure to the downside. So this is a break of structure to the downside. So our expectational order flow is for price to come back up and what, take out the new low. Okay, so it has put in a new low here, right? So what are we expecting? We're expecting price to push this market and take out this low. Possibly looking for an entry around here to take the price further down. But from the picture that was sent on the Discord, you can see that we had already had this break of structure here, which is a change in character. So when we have a change of character, we are implying that the character has moved from a bearish character to a bullish character. So this is our first indication, our first indicator to show that price is actually reversing from a bearish trend to a bullish trend. And when we have a change in character like this, what we want to do most times is to look for the demand zone that caused that change in character. And where can we see that? This is the most probable demand zone sitting right here. So let's keep going. Yep. So yeah, let's start analyzing this market from here. So first and first, since we know that this price has failed to raid this low, right? This has become a strong low and this has become a weak high since this place was raided. So this high now is weak. So therefore, it invariably makes this high weak as well, because now we anticipate that price is going to come here, look for an area to grab liquidity, and then look to take out this high right here. Okay. So our first area that we pointed out is this zone. This is our order block, is our demand zone right here. And what can we see? You can also see that the price came, when price was coming up here, it was building some kind of liquidity in form of trend line liquidity, as well as a relative double bottom, right? Or triple bottom, as we may have it here. So that's already a good indicator too, that price may likely, oh, sorry, it's a mistake. Let's just say liquidity. So yeah, that price may actually come and fill in this liquidity here and continue to the upside. Now, I don't know where our, where we're exactly. Okay, this is the liquidity building up here. Okay. So yeah, so what is the first thing now? So since we see that there's liquidity resting here, we can easily start looking for confluences for price to come all the way to our order block here and then push to the upside, right? So let's keep going. More liquidity building up. More liquidity building up. Now, what do we see again? We still see this area of liquidity here, right here. That's more liquidity building. And what do we have? We see that price has come here and filled in this area, that mitigated this area here. So let's push to the 15-minute time frame. So for the 15 minutes time frame, let's see price making this low, high, lower, low, and then let's look here. If price tends to break out this high, it would have caused a change in character once again. Okay, so that there we have it. We have our change in character on this line here. So normally, since this happens here, more or less, since the pricing gets into our order block at the first instance, and if you want to like risk an entry here, what we'll normally do is to like put your entry from here and put your stop loss somewhere below this line here. Now it may be tricky also because this may also be a form of inducement to bring price lower to actually fill in or come into this order block to test. But if you are trading smart money concept, that wouldn't really be a problem because as far as your risk to reward is pretty stable, then you won't really have an issue looking for the right entry more than one time. I'll tell you why towards the end again. So let's see how this would have played out. So now we're anticipating for price to come and tap into this area before moving to the upside again. And that's it. That's like a 1:4 right there. Okay, so now we have it tapping, right? So let's see that we are in this trade right now. Do we have a 1:1 already? Okay, already this is a 1:2, meaning that on this trade alone, if you are risking $100, you'll be up $220 on this trade. So that's a 1:2. And ideally, there's a statistics that I normally give when I'm trading. So if we have 10 trades, if we're going to trade 10 times in a row, and each of the risk management schematics is based off of your 1:2 reward, right? So if you are trading a particular pair 10 times, you only have to be right 4 times out of 10 for you to still be in profit. Why? Because if you lose 6 trades, you'll be losing $600. And if you make 4 trades, you're making it $800. So if you subtract 800 from 600, you'll still be up $200 profit. So it just matters on the kind of concept that you're trading, or maybe if it's it just depends on your entry. If it's a Wyckoff semantics that you're using, or if you are using any other confluences. But just know that your risks to reward actually matters. So this trade alone would have made I mean, if you're doing 1:2 on this trade, you would have hit your TP. And also, when the trade has already moved 1:1, normally what I do is to take my stop loss from here to break even here. Okay, so but let's just leave this to see how it plays out. Okay, so let's keep going. Okay. Okay, so that's our TP1. Excuse me. So on this trade, we were able to get 1:4.3 on this trade. And I think I did take this trade on I think I need to be labeling this. Yeah, I think this was that trade here. So this was the first trade, right? But we didn't stop there. We didn't stop there. And let's keep going. Because my anticipation was for price to actually come and take out this 4-hour high, right? This 4-hour high. But since we didn't get into the other block, what I was targeting mainly will be this. Though my trade did run past this, but I'd closed a substantial amount of my profits and left the remaining one to like keep going. So let's see. Let's go to the let's say 30 minutes time frame. Okay. Before. So ideally, this could be my actual target, right? Because don't forget that this high, we're trying to rate this high. Since this high has been violated, this one is more likely to be violated as well. So my original TP is this high. But along the way, you can be targeting, if your risk to reward, if you are very hell bent on sticking to your trading plan, your risk to reward is 1:2 or 1:, whatever, then you actually want to like max out that risk to reward, then close a good amount of profit and let the rest run. Okay, then you set your break even. So on this trade here, I think I ran it all the way up to like this level here. Then let's see, that was the trade number one. Then you see how the market started coming down, and what happens? It has officially tested our order block. So when this happened, let's go to maybe 15-minute time frame. Since I know it has now come to our order block, right? What am I looking at now? This level. I'm still believing that this level will hold, because if it comes and breaks and close below this order block, then it would have been invalidated, right? So the next thing I want to do is to go to a smaller time frame to actually see what is happening there. And we can see that it's also doing practically the same. It's consolidating there. And what do we see? We see it making this low, high, low. We have around that change of character here. All right. So I had a change of character. What did he do? He leaves this new zone. Normally I'll trade this zone all the way to this downside here, but let's just keep it at this for now. Okay. So what I'm looking for is for price to like maybe tap into this zone and continue going upwards again. Stop loss now can be below here. Then now where will you be targeting? We have two highs. Now we have the 4-hour high, which is this, and then we have this area here. So ideally, let's go to maybe 4-hour. So now we have these two highs. We have this one and we have this one. So normally if I was to trade this, I would be looking to take my profit just below this order block right here. Okay. So let's see. So this would be a 1:, yeah, this would be a 1:6. So all right, so we're tapped into that trade. See price moving quite slowly anyways. But what do we have here? Let's just check. This is already a 1:, okay, 1.3. So we are still in profit either ways. Okay, have we gotten our 1:2? Yeah, certainly. So we've gotten our 1:2 at this point. Well, let's keep going. So my point of showing you the one, making reference to the 1:2 is that have your trading plan. So if I'd gotten my 1:2 in this trade, normally I would then close, let's say I was trading with $100, right? I would have closed like $90 out of it and left $10 to run. Okay. So let's see how this trade played out. Now, do not forget something as well. If you look closely here, right, two things are happening. Though we tapped into this trade here and we already made 1:2, there's still this small level of imbalance here in the market, which price can also come and tap into. Why? Because if you check this trade now, you'll see that liquidity is just forming. Liquidity is forming almost everywhere in forms of consolidations, in forms of equal lows. You see liquidity is in form of one trend line liquidity. So it also means that price can actually push to the downside to sweep out this liquidity and then take off from there again. So you have to be wary of that at the same time while you're holding or why you choose to hold in long positions as well. So let's see how that worked out. Okay, now what do we see? If we had a break even on this trade, would have broken even, right? And what has happened now? Price has literally tapped into our order block now. So two things, you can actually have opened a position from here. Let's say you were holding up until to get here, or you wanted to tap into your order block before opening a trade. You can choose to open a trade right here, or you can choose to wait for more confluence. Then your first TP will be this high and your stop loss can be this low. That's 1:2.8. Or you can wait for it to break out this high and then retest and then you get in. Okay, so we tapped in now. And we hit our TP on 1:2.8. That's almost a 1:3 anyways. Then yeah, let's see what's up. Let's go to a 1 hour time frame so we'll make it a bit speedy. Yep. So what happened again? We have a further break of structure to the upside. So this low now was rated here with a change of character. So that's an indication that price is going down. Now, if you look at this again from this view, we have this low that relatively put in this high, that put in this low. So this was where our first, okay, now on this smaller time frame here, right? We have this low, put in this high, put in this low. So here we have a break of structure here as well. Okay, we have a break of structure here. Now this it's retraced, took out this high, right? And then there's this order block resting here. I don't know if you can see this order block resting here. So that's also a possibility too if you're looking at it from this 1 hour time frame. Let's see what 4 hour look like. Okay, so that's a possibility for another trade again. If price comes here, you have to look for, you don't just jump into, you have to now wait and see or search for other confluences that can make you want to get into that trade. So let's see what's up. So we have a change of character that happened here, right? Followed by a break of structure. And what happened? Bam. Let's step back a bit. Let's see what happened right here. So if we go on a 15-minute time frame, right? When this high took out this low, we now had a what? We had a change of character here, right? Followed by what? So this is the new low right here. So we need price to come and raid this low. And that was it here. This was a further break of structure. Okay, to the downside. Then what happened? Share price tapped into this area nicely. Let's go 5 minutes. 5 minutes. You see what happened here? Price tapped inside, pushed up. Price tapped inside, pushed up, came back to retest this level, and then all the way up. Let's go 15 minutes time frame. So also, like what I said, if you also just the tap in, tap out, if you had put in your entry from this order block right here, right, and targeted this high, what would have happened? Well, you would have made it up to maybe 1:3.4, which of course, if you were doing 1:2, you would have made out that trade again. But yeah, that's what's up. So it came and it took us out here. Oh no, sorry, it didn't take us out. We're still in that trade. Okay. Now you see that there's an order block here. So normally price may always react from another block, especially when there's an imbalance here that this price left here on field. Okay. So normally you put your TP just before the imbalance, and that would have been a 1:5 trade right there. And just if you are wondering, I took all these trades that I'm showing to you. So this was on the 19th, right? And this was on the 19th. So let's still check. This was on the 27th, right? This is another trade. This now this is the trade I'm currently explaining to you now. You can see that I'm still, this is a 1 hour time frame. So let's put it on 1 hour. Yeah, so if we pull that up again, you can see that this is my entry, and it's at this two top here. You see this two top. So this was the trade I entered in, and I think I'm still very much in the trade. I've closed out a substantial amount of my profit, but I'm still in this trade. So yeah, that's it. That's real time. So if you see now, you can see that the market is moving. This is real time now. So I'm currently in this trade. Let me see if I can pull it up real quick. Yeah, so if you can see, you'll see that I'm still very much in that trade right there. So so yeah, so my point is this: only in this GU setup now, I've been able to take about, I took about 4 trades on this GU setup. Now the reasoning behind this trade is that on the bigger time frame, price has rated this high, causing a change of character. So my expectational order flow now is for price to retrace, fill in orders here, or taking orders from here, and take out this high that is sitting right here, because there's a lot of liquidity now that's been building up here. Liquidity here, this has taken it. This could be an inducement, tap into this other block, and now price may be playing, all till it comes and take care. So in the interim, my price is still making up his mind on how he's going to get to this top. What I'm going to be doing is to be looking for areas of real nice mitigations, areas of pure break of structures and change characters, and also overall to ensure that as fast price is still trading within this price leg to this price leg, which is the internal range structure, then I'm good to go. I keep on buying. You get. But if price comes and raid this place, then my whole the bias of the market changes. Then that way I'll have to wait before I start seeing setups. So for me, I'm still thinking that this price, I'm good, like my trader is running now, I'm going to leave it to run all the way up here. But I've already taken my profit. So even if it comes and take me out on break even, I'm fine. You get. So that's about that for EUR USD. Now, if you are watching my videos, I want to encourage you to join my Discord community. It's basically free. Trust me, it's basically free, though you may pay like a one-time fee, but it's for life. And the reason is because I want you to be serious. If you come in for free, you may not be serious. I may not take it serious. And it's not for beginners. Yeah, it's for people that already know how the market works. But if you want to learn Forex as a beginner, I would advise you go on YouTube and watch those introductory videos like Forex for beginners and all that. You can learn that by yourself. You don't really need someone to teach you that. Though it's very important you have a mentor to guide you through it. I'll be happy to do that as well. So if you like this video, if you want me to keep doing more videos like this, then please like, support, and share it. And thank you and take care. Take it easy, guys.